Hello students, welcome to the lecture on fire insurance, and after this lecture we will be able to learn the following objectives. Describe concept of fire insurance, discuss the types of fire policies, analyze the special policies of fire insurance, explain the standard fire and special perils policy covers, describe the rules and regulations under tariff. Let us start with the introduction to fire insurance. The most popular property insurance is the standard fire insurance policy. The fire insurance policy offers a protection against any unforeseen loss or damage to destruction of property due to fire or other perils covered under the policy. The different types of property that could be covered under a fire insurance policy are dwellings, offices, shops, hospitals, places of worship, etc., and their contents, industrial manufacturing risks and contents such as machinery, plants, equipment and accessories, goods including raw material, material in process, semi-finished goods, finished goods, packing materials, etc. in factories, godowns and in the open utilities located outside industrial, manufacturing risks, storage risks outside the compound of industrial risks, tank farms, gas holders located outside the compound of industrial risks, etc. Let us now discuss about fire insurance in detail. Fire insurance business means the business of effecting otherwise than incidentally to some other class of business contracts of insurance against loss by or incidental to fire or other occurrence customarily included among the risks insured against in fire insurance policies. What is fire? The term fire in a fire insurance policy is interpreted in the literal and popular sense. There is fire when something burns. In English cases, it has been held that there is no fire unless there is ignition. Fire produces heat and light, but either of them alone is not fire. Lighting is not fire, but if lighting ignites something, the damage may be covered by a fire policy. The same is the case with electricity. Fire classifications. Class of fire. Fires involving organic solids like paper, wood, etc., as well as soft furnishings, fabric, textiles. Class B fires. Fires involving flammable liquids like petrol, oil or paints. Class C fires. Fires involving flammable gases. Class F fires. Fires involving cooking oil and deep fat fryers. Characteristics of fire insurance. Fire insurance is a contract of indemnity. The insurer is liable only to the extent of the actual loss suffered. Fire insurance is a contract of good faith. Fire insurance policy is usually made for 1 year only. The policy can be renewed according to the terms of the policy. The contract of insurance is embodied in a policy called the fire policy. Interest. A fire policy is valid only if the policyholder has an insurable interest in the property covered. Such interest must exist at the time when the loss occurs. Fire policies cover losses caused proximately by fire. The term loss by fire is interpreted liberally. Nothing can be covered under a fire policy if the fire is caused by a deliberate act of policyholder. In such cases, the policyholder is liable to criminal prosecution. History of fire insurance. The development of fire insurance can be traced back to 1601 AD when the Poor Relief Act was passed in England. Fire Act, letters called briefs, were read from the church asking for collections from the public to help those who suffered losses from fire. There was a great fire in London, a historical disaster in which within span of 3 days from 2nd to 5th September 1666, 80% of the city was destroyed, which sowed the seeds of fire insurance as we know it now. First, only buildings were insured and the first fire office was established by a builder, Nicholas Barbin, in 1680. In 1708, Charles Povey founded the Traders Exchange for insuring movable goods, merchandise, and stocks against loss or damage, and this was the first to insure both the building and its contents. Need for fire insurance. Fire insurance is important because a disaster can occur at any time. There could be many factors behind a fire. For example, arson, natural elements, faulty wiring, etc. Advantages of fire insurance. Aids the planning process in businesses. Prevents firms and families from experiencing the hardships. Allows businessmen to continue their activities in a much more normal fashion after a loss. Provides payments for the unexpected losses. Barriers to fire insurance. The barriers to fire insurance are moral hazards, legal frameworks, regulatory bodies and processes, competition, skills and training, market initiatives, bad faith. Meaning of fire insurance. The fire insurance business is defined as follows. Fire insurance business means the business of effecting otherwise than independently to some other class of business contracts of insurance against loss by or incidental to fire or other occurrence customarily included among the risks insured against in fire insurance policies. The items which can be burnt, damaged through fire, buildings, electrical installation in buildings, contents of buildings such as machinery, plant and equipment, accessories, etc. Goods, raw materials in process, semi-finished, finished, packing materials, etc. in factories, godowns, etc. Goods in the open, furniture, fixture and fittings.
In the morning, the furnace wasn't working, so the furnace company came actually to do a repair, and in doing that repair, bypassed a safety switch in the furnace, which caused the furnace to get too hot when it was refired, and the condensation pan that was within the furnace actually caught fire. Smoke filled the entire house, but it was literally black smoke coming down from the ceiling about 5 feet, and you couldn't see through the smoke at all. My youngest daughter, who at the time was 2, was home, so I went door to door as the house filled with smoke to try to find her, and then was able to evacuate. The fire inspector actually told us that had it been another 30 seconds, we would have lost the entire house. So I was feeling very frustrated and angry, and I didn't quite know what to do or how to move forward.
It was actually the end of my day that day. I was actually getting ready to head out of the office, and then got word that I had a new assignment to handle. I saw that it was a house fire claim, and I knew that that's something that's pretty important to get on right away, so that's what I did.
He inspected that loss within an hour of it being reported, and he made sure our customer service was really spot on in terms of assisting the policyholder right away with the multitude of questions they would have.
I was a wreck. Because things were really difficult. But he walked in the house an hour after calling the national line and handed me a prepaid credit card and said, get out of here, take care of your family, we'll talk about this in the morning, we'll take care of you.
We were managing multiple concerns. It's winter in Rochester, the home doesn't have a working furnace. We're very concerned about things getting worse in terms of frozen pipes. The policyholders are displaced from the home, which puts them in a hotel and really takes their lives out of normal and makes things much more difficult for them. Quinn managed multiple people, heating people, furnace people, mitigation vendors. He ultimately had the furnace repaired and the policyholders back in their home by Saturday.
Quinn was always helpful, always available to answer questions. I would call his cell phone, he would answer if I had a question on the spot. He was available via email, would call to check in. Just very, very helpful.
You really need to keep those communication lines open and let them know that you're always, there if they have any questions. There are always going to be questions that they have. They don't go through this on a normal basis. You want to make them feel comfortable and make them comfortable with what's going to be coming in the future and the process that needs to be done in order to get them back to normal.
One of the things that was really important to me was getting back in the house as soon as we could.
Our job is to make it as easy as we can and help get them through it as fast as possible.
From the moment he arrived at the door and told me not to worry, we would take care of everything, go take care of your family, we'll talk about it in the morning. Absolutely peace of mind. Everything that I hear, everything that I experience is just that Amika and Amica's people care about its policyholders.
Features of fire insurance. The features of fire insurance are offer and acceptance. It is a prerequisite to any contract. Similarly, the property will be insured under fire insurance policy after the offer is accepted by the insurance company. Payment of premium. An owner must ensure that the premium is paid well in advance so that the risk can be covered. If the payment is made through check and it is dishonored, then the coverage of risk will not exist. Contract of indemnity. Fire insurance is a contract of indemnity and the insurance company is liable only to the extent of actual loss suffered. If there is no loss, there is no liability even if there is fire. Utmost good faith. The property owner must disclose all the relevant information to the insurance company while insuring their property. The fire policy shall be voidable in the event of misrepresentation, misdescription, or non-disclosure of any material information. Insurable interest. The fire insurance will be valid only if the person who is insuring the property is owner or having insurable interest in that property. Contribution. If a person insured his property with two insurance companies, then in case of fire loss, both the insurance companies will pay the loss to the owner proportionately. Does not fire insurance cover everything? Most fire insurance only covers house's structure and the fixtures and fittings provided by the insurance policy for damages due to fire and other unforeseen events. It does not cover renovations, furniture, personal belongings and areas outside unit or liability should neighbors unit be affected by the disaster too. Types of fire insurance. There are two types of fire insurance: home, business. Procedure to insure the property under fire insurance. For insuring any property under the fire insurance policy, the following is the procedure: filling of proposal form, inspection of the property, payment of premium, issue of cover note policy document in lieu of acceptance of the proposal. Filling of proposal form. The fire proposal includes the following information: construction of external walls and roof, number of stories, occupation of each portion of the building, presence of hazardous goods, process of manufacture, the sums proposed for insurance, the period of insurance, history of previous losses, insurance history, procedure to settle the fire insurance claim. A. If there is any damage or loss arising due to fire, then the policyholder should immediately inform the insurance company in writing and with estimated amount of loss. Survey report. If the amount of loss is small, that is up to INR 20,000, the insurance company may depute an officer to survey the loss and decide on the settlement of the loss on the basis of the claim form and the officer's report. Claim form. The policyholder will submit the claim form with the following information: name and address of the insured, date of loss, time and place from where the fire started, cause of fire, details of the property damaged such as description, etc., value at the time of fire, value of salvage and the amount of loss, details of other policies on the same property giving the name of the insurer, policy number and sum insured. Fire brigade report details. The FIR at the nearest police station regarding third-party liability, if any. Settlement of claim. On the basis of the claim form and the survey report, decision is taken about the settlement or otherwise of the loss. Did you know the Tariff Advisory Committee, which is a statutory body, issued the All India Fire Tariff on March 31st, 2001, which governs all India fire insurance policies. The Commercial Fire Insurance India policy provides protection to buildings, machinery, offices and contents. Types of fire policies. A fire insurance policy involves an insurance company agreeing to pay a certain amount equivalent to the estimated loss caused by fire to the insured within the time specified in the contract. One should confirm with the insurer about the types of risks covered, since one cannot insure the property against all types of risks of fire. Specific policy. The insurer is liable to pay a set amount lesser than the property's real value. In this policy, the property's actual value is not considered to determine the indemnity. Comprehensive policy. This all-in-one policy indemnifies for loss arising out of fire, burglary, theft, and third-party risks. The policyholder may also get paid for the loss of profits incurred due to fire till the time the business remains shut. Valued policy. This policy is a departure from the standard contract of indemnity. The amount of indemnity is fixed and the actual loss is not taken into consideration. Floating policy. This policy is subject to the average clause. The extent of coverage expands to different properties belonging to the policyholder under the same contract and one premium. Replacement or reinstatement policy. This policy is subject to the reinstatement clause, which requires the insurance company to pay for replacing the damaged property. Consequential loss policy. This policy provides one with coverage against pecuniary loss as a result of fire and its insured perils covered under the fire policy. A blanket policy. This policy is issued to cover all the fixed and current assets of an enterprise by one insurance. Declaration policy. In this policy, trader takes out a policy for the maximum value of stock which may be expected to hold during the year. Sprinklers leakage policy. It covers the loss arising out of water leakage from sprinklers which are set up to extinguish fire. Average policy. Under a fire insurance policy containing the average clause, the insured is liable for such proportion of the loss as the value of the uncovered property bears to the whole property. How much premium does someone have to pay? Fire consequential loss insurance rate is the average base rate derived from the total fire policy premium divided by the total fire sum insured by 100%. Fire insurance premium is tariff rated, the total premium that someone has to pay. Special policies of fire insurance. The special policies are floater policy. This policy is issued only for the stocks, not for plant and machineries. Sometimes the stock is kept at various locations and it is very difficult to provide the value of stock at each location. Therefore, to cover the risks of stocks at various locations less than one sum insured, an additional premium can be paid. Declaration policies. This type of policy is useful where there are frequent fluctuations in stocks, stock values, and to avoid the insurance of low value of the stock, declaration policies can be granted subject to the following conditions. The minimum sum insured shall be INR 1 crore. Monthly declarations based on the average of the highest value at risk on each day or highest value on any day of the month shall be submitted by the insured latest by the last day of the succeeding month. Reduction in sum insured shall not be allowed under any circumstances. Refund of premium on adjustment based on the declarations. Cancellations shall not exceed 50% of the total premium. Floater declaration policy. It is combination of the mentioned policies, that is, stock lying at different locations and the value of stock fluctuating. Floater declaration policies can be issued subject to a minimum sum insured of INR 2 crores and compliance with the rules for floater and declaration policies respectively, except that the minimum retention shall be 80% of the annual premium. Standard fire and special perils policy covers. There is said to be a fire within the meaning of fire insurance when there is actual ignition. The fire is purely accidental or fortuitous in origin so far as the insured is concerned. The fire has burnt, damaged the property of insured. This policy is taken to insure a specified risk which could be any or of all of the following: building, furniture and fittings, stocks, plant and machinery, and any other specified fixed assets. Perils covered. The major perils covered in a fire policy can be grouped as fire perils: fire, explosion, implosion, aircraft damage. Fire. It is actual ignition by accident means and does not include the following: property undergoing drying, heating process, burning by order of public authority, spontaneous combustion. Exclusions: war and war group of perils, nuclear group of perils, earthquake, volcanic eruption, theft, burglary except during strike, electrical fire due to short circuit, arcing, excess of voltage, excluded property. Bullion, curious, plans and drawings beyond rupees 10 lakh. Loss or damage to machinery when removed to another place for repair for a period beyond 60 days. Excluded losses. Consequential losses: damage by spoilage due to interruption of any process, damage to stocks in cold storage premises. Rules and regulations under tariff. Rules and regulations play crucial role for developing any industry. These are: one industry, one rate. As per the new guidelines, the principle of one industry, one rate should be followed. It is important to classify the industry as per the correct risk code. No selection of property. All property has to be covered and selection of property is not allowed in fire insurance. Block-wise sum insured. Building, plant and machinery, stock, stock in process, furniture, fittings. Risks are covered in two major heads. Non-industrial risks includes dwellings, shops, hotels, schools, colleges, clubs, office premises, etc. Industrial risks, example, chemical, textile, rubber, cement, sugar, etc. Did you know the General Agreement on Tariffs and Trade (GATT) was a multilateral agreement regulating international trade? According to its preamble, its purpose was the substantial reduction of tariffs and other trade barriers and the elimination of preferences on a reciprocal and mutually advantageous basis. Perils particular to particular industry. There are certain perils which are not common across the board, but are specific to certain industries only, like spontaneous combustion, coal, material spoilage, breweries. These can be added on as optional to the standard policy. Spontaneous combustion. It is hereby declared and agreed that notwithstanding anything being contained to the contrary, the insurance by this policy shall extend to include destruction or damage by fire only of or to the insured property caused by its own spontaneous fermentation, heating or combustion. Special stock. Insurance policy. Floating policies. Floating policies are policies which are taken to insure the risk at a number of locations under one policy. Floating policies can be issued in respect of immovable property. Declaration policies. Declaration policies are policies which are issued in case there is a fluctuating stock balance throughout the year. Basis of valuation policy. Reinstatement value policies are taken for covering a risk for the value of its reconstruction, replacement, reinstatement in case of a loss. This basis of valuation is followed while taking up the insurance policy to ensure that the insured is adequately covered in case of a loss. Reinstatement value insurance may be granted on buildings, machinery, furniture, fixture and fittings only. Special rated risks. Certain industries can be given special concessional rate which has to be granted by the Tariff Advisory Committee only. Escalation clause. An increase in the sum insured throughout the period of the policy can be opted by the insured in return for an additional premium to be paid in advance. Loss of rent clause. Where loss of rent caused by insured perils is covered, the rate chargeable for the above cover is the rate applicable to the particular building or premises concerned. Average. By applying the principle of average, the adequacy of sum insured is checked. Underinsurance is penalized. Claims are settled on the following basis. Claim amount is equal to loss into sum insured value. Contribution. In case of multiple insurers, then the loss will be borne by them as per their ratios and proportions. Reinstatement of sum insured. Sum insured is per policy limit. Any claim settled will reduce the sum insured by the claim amount. Sum insured will be reinstated by payment of additional premium for the unexpired period from date of loss. Provisions of reinstatement value clause. Reinstatement value insurance may be granted on buildings, machinery, furniture, fixture and fittings only. The insured must intimate to the insurer within 6 months from the date of destruction or damage or such further time as the company may in writing allow his intention to replace or reinstate the property destroyed or damaged. The insured must also intimate to the insurer in writing his willingness to replace or reinstate the property destroyed or damaged on the same or another site. The work of replacement or reinstatement must be commenced and carried out with reasonable dispatch and in any case must be completed within 12 months after the destruction or damage. Now in the end, let us summarize what we have learnt in this lecture. The fire insurance policy offers protection against any unforeseen loss or damage to destruction of property due to fire or other perils covered under the policy. Fire insurance business means the business of effecting otherwise than incidentally to some other class of business contracts of insurance against loss by or incidental to fire or other occurrence customarily included among the risks insured against in fire insurance policies. The property owner must disclose all the relevant information to the insurance company while insuring their property. A fire insurance policy involves an insurance company agreeing to pay a certain amount equivalent to the estimated loss caused by fire to the insured within the time specified in the contract. Floating policies are policies which are taken to insure the risk at a number of locations under one policy.